Welcome to TalkTickers. You're here for the critical insights from the latest earnings calls without needing hours to listen.
Yeah, we cut right to the chase.
Exactly. Today, we are diving straight into Monday.com's first quarter of fiscal year 2025. We've got the key performance indicators, management's take, and, the trends that really matter for investors. Let's get right into it.
Okay, so Monday.com definitely kicked off their fiscal year strong. Q1 results looked pretty solid.
Solid how? Give us the highlights.
Well, revenue saw robust year-over-year growth, up 30%.
30%? Okay, that's a strong number.
It is. And what's maybe even more notable, they hit a record quarterly operating profit.
A record profit. Nice.
And on top of that, they generated their highest ever cash flow for a single quarter.
Wow, okay. Record profit and record cash flow. That suggests things are clicking operationally. What else stood out in the snapshot?
Their net dollar retention, NDR, that key SaaS metric, it held stable at 112%.
112%. Still healthy expansion from existing customers then.
Yeah, exactly. And gross margin remained really strong at 90%.
90% gross margin is fantastic. Shows the core product economics are sound.
Definitely. Plus, they reported a significant jump in net income for the quarter. So, positive signs across the board, really.
Okay, so the high-level picture is undeniably strong. Let's dig a bit deeper. What's actually fueling this? Management mentioned a couple of things, right?
They did. They pointed to the strength of their multi-product offering as a key driver.
Makes sense. More ways to win.
And also a real focus on operational excellence. Just getting the fundamentals right.
Right. Getting efficient. Now, something else jumped out, didn't it? The AI adoption.
Oh, absolutely. This was a big point. Customers seem to be rapidly adopting their new AI-powered features.
How rapid are we talking?
They reported over 26 million AI actions performed just in Q1.
26 million.
Yeah, and get this, that's up more than 150% just since the end of 2024.
Wow, okay. 150% jump in, 3 months? What are people actually using it for?
It sounds like a mix. Things like task automation, which is a classic use case.
Oh, sure.
But also extracting insights from data, and generally just accelerating decision-making, helping people work smarter, basically.
That kind of adoption really signals that the AI features are hitting a nerve, solving real problems, and this ties into their enterprise push too, I imagine.
Definitely. The enterprise segment continues to be their fastest growing area.
So lots of opportunity there still.
Huge opportunity for market share expansion. And to support that, they actually launched new capabilities in Q1, specifically for the work management enterprise tier.
Enterprise-specific tools. That's smart. What kind of things are we talking about?
Think about what larger organizations need. AI-powered risk insights, for example.
Proactive risk management, okay.
High-level portfolio reports, again, using AI. Managed templates for consistency across teams.
Crucial for big companies.
And better resource planning tools. Features designed to really embed them deeper into those larger workflows.
Those sound like valuable, sticky features for enterprise clients. And speaking of enterprise focus, they made a significant leadership change too, right?
That's right. They brought in Casey George as the new Chief Revenue Officer.
And he has quite the background.
Yeah, nearly 30 years of experience scaling enterprise software organizations. We're talking Click, Talent Variant, IBM, places like that.
So the expectation is he'll really help accelerate that enterprise growth.
Exactly. Accelerate growth, strengthen those key customer relationships. Seems like a very strategic hire at this point in their journey.
Makes sense. Now, was it just the core work management products seeing success, or was it broader?
It sounds like it was pretty broad. They highlighted strong momentum across the entire product suite.
So work management, CRM?
Yep, Monday CRM, Monday Sales CRM, Monday Dev, and Monday Service. They seem to be firing on, well, maybe not all cylinders, but quite a few.
Good to see that diversification paying off. And they're adding new logos too, not just expanding existing ones.
Correct. Strong net additions of customers in Q1. They did note that part of this could be seasonality and performance marketing spend, which is, fairly typical.
Typical stuff.
But yeah, new customers are coming in. And interestingly, for Monday Service, 70% of its annual recurring revenue, or ARR, is coming from the mid-market and enterprise segments.
Oh, interesting. So Monday Service isn't just an SMB play anymore. It's moving up market.
Apparently so.
Yeah.
Seems to be resonating with larger organizations too.
What about Monday Dev? Any updates there?
They said they're making encouraging progress, still optimizing the go-to-market for it, but positive signs.
Okay. Let's circle back to that net dollar retention, the 112%, stable overall, but any nuances there?
Yeah, while it was stable overall, they did mention seeing improving retention specifically within their larger customer cohorts.
So the big customers are getting stickier. That's a good sign.
It is. However, they did give a heads up. They expect NDR to maybe dip slightly below that 112% by year end.
Okay, why the caution there, especially if larger customers are improving?
Primarily citing the macroeconomic uncertainty, just being prudent given the broader environment.
Right, that macro caution seems to be a recurring theme.
Now, back to AI again. Huge usage spike. But what about actually making money from it? Monetization.
Still early days there. They're experimenting, trying different approaches.
So no big revenue impact from AI just yet?
Not explicitly called out as a major driver yet, no.
Yeah.
But they did say they're seeing a correlation between usage and a willingness to pay for the value. So the groundwork is being laid.
Makes sense. Build the usage, demonstrate value, then figure out the monetization. What about other headwinds like foreign exchange?
They actually had slightly better news there. The negative FX impact for the full year is now expected to be less than 100 basis points. So less of a drag than maybe previously thought.
Okay, less than 1%. Good.
Yeah.
But despite that, and the strong Q1, their overall guidance seemed a bit cautious.
It did feel that way, yes. They explicitly link the more conservative full-year guidance back to that macroeconomic uncertainty we mentioned. They're baking in potential bumps in the road. Okay, let's get specific then. What are the numbers they put out for Q2 guidance?
For Q2 2025, they're looking at revenue between $292 million and $294 million.
Which is what, year-over-year growth?
That translates to a 24-25% year-over-year growth.
Still solid growth. And profitability.
Non-GAAP operating income expected between $32 million and $34 million. That gives you an operating margin of around 11-12%.
Okay, 11-12% margin for Q2. And then the full year 2025 picture.
Full year revenue projected between $1.22 billion and $1.226 billion.
Growth rate for the full year.
That's about 25-26% year-over-year growth. So pretty consistent with Q2's rate.
And the bottom line for the year.
Non-GAAP operating income of $144 million to $150 million, which puts the operating margin around 12% for the full year.
So roughly maintaining that Q2 margin level. What about cash flow?
Adjusted free cash flow guidance is $310 million to $316 million. That's a margin of about 25-26%.
Okay, so continued strong growth, improving profitability, and very healthy free cash flow generation seem to be the story in the numbers. Are they investing that cash back into growth, like hiring?
Yes, definitely. Total headcount was just under 2,700 at the end of Q1.
And growing.
Expected to grow by roughly 30% over the full fiscal year. So significant hiring planned.
Where are those hires focused?
Primarily sales and R&D. Investing in both reaching more customers and building out the product further.
And the free cash flow you mentioned, it's a real strength, right?
Absolutely. Q1 adjusted free cash flow was $89.5 million. That's a 39% margin for the quarter.
39%. That's very strong.
It is. And they reiterate they're on track for their goal of generating over $1 billion in free cash flow between fiscal 23 and fiscal 26.
Impressive target. How are they thinking about their go-to-market strategy going forward? Any changes?
It sounds like they're sticking with what works. That combination of product-led growth, letting the product sell itself to some extent.
Right, the try before you buy model.
Exactly. Combined with a more traditional sales-led motion, especially for those bigger upmarket deals, they plan to preserve and scale that hybrid approach.
And within existing accounts, is growth still mostly about adding more seats, or is cross-selling becoming more important?
Adding seats in enterprise accounts is still the primary driver, according to them. But they did note that cross-selling, especially getting customers to adopt Monday service, is becoming more meaningful.
Okay, so that multi-product strategy is starting to drive expansion too. How did performance look geographically? Any weak spots?
They reported healthy and consistent demand across all regions in Q1. North America continued to be strong, and they noted stabilization in Europe.
Stabilization in Europe is good news, given the headwinds there sometimes. Did the quarter progress smoothly? Any lumpiness?
They said trends were consistent throughout Q1, and that continued into April. That consistency was seen across both enterprise and SMB segments.
So stable underlying demand, it seems. Have they seen any major shifts in customer behavior overall, maybe related to the macro picture?
No significant changes reported in general customer behavior. But again, that macro uncertainty is clearly factored into their outlook and planning.
Understood. Let's look back one more time to AI. You mentioned the huge usage spike. Who exactly are these early adopters? Is it everyone or specific roles?
It seems the early adopters tend to be the more tech-savvy or solution-oriented champions within customer organizations.
The power users, maybe?
Kind of.
Yeah.
People focused on optimization and workflows. Monday.com is trying to understand those specific use cases really well.
Why? To replicate it.
Exactly. So they can build templates and educational materials to help drive broader adoption across different user types who might be less technical initially.
Makes sense. Educate the market based on early wins. What about competition? Who are they bumping up against, particularly in the CRM space?
In CRM, they mentioned frequently encountering names like Pipedrive, Zoho, Sugar CRM, and HubSpot.
Okay, mostly in the smaller business segments.
Primarily SMB and mid-market, yes.
Yeah.
And they feel their key differentiator there is the flexibility of the platform itself.
The ability to customize workflows heavily.
Right. And partners. Still a big part of the strategy.
Very much so. Partners remain significant. They help with geographic reach, getting into specific industries, landing enterprise customers, and providing technical expertise for things like implementation and integration.
So a multi-pronged approach there. Okay, that's a comprehensive look. Let's shift gears now to our This Is Not Financial Advice segment. Based on everything we've heard today, what's a potential thought experiment, maybe slightly eyebrow-raising but plausible?
All right, here's one scenario to noodle on. And again, let me stress, this is not financial advice, just a hypothetical based on today's discussion.
Understood. Purely a thought experiment.
Given Monday.com's really accelerating AI adoption, even though monetization is early, and their continued strength in enterprise, you could consider this, perhaps a long position in companies that are deeply integrated with these kinds of workflow platforms, maybe those providing sophisticated automation tools or specialized integration services.
Okay, so betting on the ecosystem around platforms like Monday.com? Kind of. The idea is that as platforms like Monday.com become more central and more capable, especially with AI, the companies enabling or enhancing those platforms could also benefit. Now pair that, potentially.
There's a hedge.
Maybe. Given the macroeconomic uncertainty Monday.com flagged, and their slightly cautious NDR outlook, you could consider a paired short position, perhaps in a basket of SaaS companies that have, let's say, weaker enterprise traction compared to Monday.com, or less clear paths to AI monetization.
So betting on the winners in platform-based workflow, especially in enterprise, while acknowledging potential headwinds for those less strategically positioned.
That's the core idea. Betting on platform strength and innovation, particularly with AI in the enterprise space, while hedging against broader SaaS softness or weaker players. But seriously, this is just connecting dots based on one earnings call. You absolutely must do your own deep research before ever making an investment decision.
Absolutely. A fascinating thought experiment, though. Okay, that wraps up our deep dive into Monday.com's first quarter earnings call.
We covered a lot of ground.
We did. Key financials, strategic moves like the AI push and enterprise focus, and management's view on the path forward. Hopefully this gives you, our listeners, a much clearer picture of the essential takeaways.
Yeah, distilled down from the full call.
So what are your thoughts? What stands out to you about Monday.com's AI strategy or their enterprise momentum? We'd love to hear from you. Join the conversation.
Let us know what you think.
Thanks for tuning in to TalkTickers. Stay informed, stay ahead.
Catch you next time.